Gold has just formed a powerful bullish weekly candle. But the real question is, will gold surge toward 4,400 or trigger a sharp correction that almost no one is ready for? But here's the truth. Most traders miss gold's biggest moves because they don't truly understand the forces driving this market right now. In this breakdown, I'll reveal how institutions are quietly positioning, uncover the 3 macro forces shaping gold's next move, and share my exact trading roadmap for the week. If you're serious about trading gold, stay with me till the end. I'll show you exactly what's driving this market and how to trade it. Macro outlook: 3 key forces driving gold. Force number 1, the US dollar dynamics, DXY. The dollar remains the most important counterforce to gold. Here's what you need to know about DXY. DXY technical analysis. Starting with the weekly chart, the DXY continues to print weak bearish candles showing persistent selling pressure. Price remains in a sideways consolidation zone between 96 and 100 with no clear breakout signal yet. With the Fed expected to cut rates next week, the probability of a strong DXY rally is very low. In the near term, DXY is likely to continue moving sideways within 98 to 99. A break above 99 may push price to retest 100, but a sustained breakout above 100 remains unlikely. If weekly price closes below 98, the index could extend lower toward 97 and 96, building a base for a potential future recovery. On the daily chart, after forming a double top and declining, exactly in line with our forecast 2 weeks ago, DXY briefly closed below 98.6 but failed to show strong follow-through. The last 2 sessions show tight consolidation, suggesting a mild corrective bounce toward 99 to 99.2 before resuming the downtrend. Zoom into the H4 chart. DXY remains within its broader downtrend. Price is currently attempting to gather momentum for a short-term recovery, but there is still no meaningful bullish candle. A dip toward 98.2 is likely before any rebound materializes. Here's the catch. DXY's next move won't just impact gold, it could rewrite the short-term trading landscape entirely. The dollar is the battlefield where gold reacts first, and everything else follows. Force number 2, geopolitical risks. While DXY drives the immediate moves, geopolitics remain the deeper structural force supporting gold's long-term strength. Recently, the US deployed F-35 fighter jets and additional military assets near Venezuela. Caracas responded immediately by activating its S-300 air defense systems, reportedly prepared to engage any US aircraft. This isn't just political noise, it's a clear escalation in global tension, and gold consistently reacts to these developments. Russia-Ukraine peace talks have shown some progress, but no agreement has been reached. Until a concrete resolution emerges, uncertainty will continue to support gold as a safe haven asset. Now let's look behind the charts, at the institutional flows shaping gold's next move. Finally, institutional activity. While retail traders are still debating whether gold has already peaked, institutional players tell a different story. Throughout the past week, the Gold Trust engaged in some light selling to rebalance into better positions, but the dominant action was accumulation. In total, they added 5 tons of gold, bringing total holdings back up to 1,050 tons, supporting the recent upward momentum. Most importantly, they have not unloaded any significant portion of the gold accumulated earlier. Both the weekly and monthly charts confirm this behavior, signaling that the fund still expects higher gold prices in the medium to long term. When capital of this magnitude shifts, retail traders often get trapped chasing moves too late, and that's when the real game in gold begins. These activities suggest the fund is still positioning to push gold toward the 4,300 to 4,400 range, possibly further to 4,700 to 5,000 before taking profits. Now that we understand how capital is moving, it's time to turn to the charts. Let's zoom in and see what gold is really telling us. Gold technical analysis. First, congratulations to everyone who acted on my October 29, 2025 analysis by buying near 3,900. They're now enjoying gains exceeding 3,000 pips. We called this move from 3,900 before it even started, and that's the power of understanding market structure. We shared lots of setup earlier in our Telegram group before market move. That's why it's crucial to subscribe to the channel or join our Telegram to get real-time updates so you don't miss the next major wave in gold. Now let's zoom in on the charts. Weekly, daily, H4. Step by step, here's what the market is really showing. Starting with the weekly time frame. Since bottoming at 1600, gold has surged to 4400, a move of nearly 28,000 pips. This rally was fueled by four converging forces. The dollar's drop from 114.6 to 96, geopolitical risks in Ukraine and the Middle East, trade tensions under the Trump administration, fiscal risks, government shutdown in Washington. Ask yourself, how often do we see such perfect alignment? It could take more decades or never happen again. At this stage, peace in Ukraine remains elusive. Tensions between the US and Venezuela are escalating, ongoing, central bank accumulation, and global markets have yet to find solid footing. All of which continue to support gold's upside momentum in the coming weeks. However, a strong rebound in the US dollar, DXY, could easily trigger a sharp correction in gold from current levels. On the other hand, if the DXY continues to consolidate or weaken, gold is likely to rebound toward 4260. A decisive breakout above this level would open the door for a move toward 4300, 4400, and potentially higher. On the weekly chart, gold continues to hold firmly within its strong long-term uptrend. Last week posted only a mild pullback relative to the prior strong rally. With the Fed expected to cut rates next week, dollar demand will likely soften, giving gold room to advance. Gold may attempt to move toward the 4300-4400 resistance zone. Over the coming weeks, the broader structure suggests continued consolidation between 4100 and 4400 as the market builds energy for a potential breakout above 4400. If price breaks 4400, the next major upside target expands toward 5000. Downside risk next week remains limited unless the weekly candle closes below 4100, which could trigger a retest of 4000 or even 3900. Shifting down to the daily. Now let's look at the daily chart, the clearest window into gold's next move. The final candle of last week formed a bearish pin bar triggered by SPX 500 hitting resistance and mild profit-taking. However, price has spent 6 consecutive sessions consolidating tightly between 4150 and 4260 while still holding above the major bullish trend line. Early next week, gold is likely to continue ranging as traders await the Fed rate cut announcement on Wednesday, December 10, 2025. If the daily candle closes above 4400, gold could extend sharply higher toward 4700 and 5000. So let's zoom in to the H4 chart, where things get even more interesting. Gold remains firmly within its upward trend. Price continues to consolidate sideways, facing strong selling pressure at 4240 to 4260, while buyers remain active around 4015 to 4180. Gold is currently touching its rising trend line, suggesting a mild bounce could occur before another retest of the lower range to build a stronger base. If H4 closes above 4260, upside extension toward 4300 and 4400 becomes likely. This gives traders a clear multi-time frame view. Overall structure remains bullish, with the current pullback seen as a healthy correction within the uptrend. All of this leads us to the key question: why consider both buying and selling gold at this stage? Gold stays in a strong bullish cycle supported by institutional demand and solid technical setups. However, the DXY rebound remains a key headwind to watch. Let's turn that analysis into a practical trading plan, the exact playbook I'll be following for the week ahead.
Trading plan, December 8th to 12th, 2025. First buy zone, 4,000 to 4,043. Weekly support, round number, plus fail break. Probability approximately 95%. Stop loss, 3,997. Targets, 4,077 to 4,097, short, 4,137 to 4,197, mid, 4,217 to 4,397, long. Second buy zone, 4,100 to 4,123. H4 breakout, round number, probability approximately 90%. Stop loss, 4,097. Targets, 4,167 to 4,197, short, 4,227 to 4,257, mid, 4,277 to 4,397, long. Third buy zone, 4,150 to 4,185. Nearest support plus rising trend line, probability approximately 85%. Stop loss, 4,147. Targets, 4,197 to 4,217, short, 4,227 to 4,257, mid, 4,277 to 4,397, long. Pro tip: false breakout? Wait for the retest, re-enter for clean profits. Remember, probabilities don't guarantee outcomes, but they keep us disciplined. First sell zone, 4,247 to 4,260. Daily strong resistance, probability approximately 85%. Stop loss, 4,265. Targets, 4,241 to 4,221, short, 4,203 to 4,183, mid, 4,154 to 4,103, long. Second sell zone, 4,377 to 4,400, all-time high, probability approximately 90%. Stop loss, 4,401. Targets, 4,353 to 4,303, short, 4,253 to 4,203, mid, 4,153 to 4,103, long. Gold doesn't move randomly, it reacts to real global shifts. Don't miss the next big move. Opportunities like this don't come often. Subscribe now and join our community for real-time alerts and exclusive insights you won't find anywhere else. Master Gold, master the market. This is not financial advice.